Have you ever wondered what it takes to get pre-approved to purchase a home in today's market? In this video, I'm going to be covering the 3 simple steps that my team uses to help all of you get pre-approved all across the country. And as an added bonus, if you stay to the end of the video, I'm actually going to talk about what can get you denied during your loan application process. So number 1, we're going to start with the loan application. Every mortgage lender is going to start with a credit application so that way they can know what your credit score is and the debt that shows up on your credit report. Those are 2 of some of the most important factors of whether or not someone can purchase a home. Now, some of you might say, well, Sean, I'm not ready to have my credit pulled yet. And that's totally fine. You can use other credit services like Experian.com and even Credit Karma and CreditWise and some of these other Credit Sesame websites to give you a rough range of what your score is. Just remember, those credit scores are not the credit scores that a mortgage lender is going to use to qualify you. So it is a good way to keep an eye on your overall credit profile, but that's not what we're going to use to qualify you for the mortgage. Now, when we look at the debt on your credit report, that is what's going to determine your DTI or your debt to income ratio. That is why the credit application is the most important part of the entire process. Because if you don't have the credit to purchase, that is the number one thing that now your loan officer is going to have to help you understand how to build your credit in order for you to qualify. Every loan program out there has specific requirements as to the credit score that is required for anyone to qualify for the loan, as well as the debt to income ratio that everyone has to fall under in order to qualify for the mortgage. That's why we love to start with the application. Now, when we go through the application, we're gonna ask you some basic questions about yourself, your name, your date of birth, your social. So when your lender starts asking you these questions, it may sound invasive for them to know all of that, but just know that that is part of the process, and we do need that information in order to run your credit. Another couple of things that you want to keep in mind is we're going to ask you, where have you lived for the last 2 years, as well as where have you worked in the last 2 years. The whole 2-year concept is pretty common throughout the entire mortgage process. As we get into some of the loan documents that you're going to need, you also see the number 2 coming up again and again. So if you've moved around or if you've changed jobs several times, try to know that information because it's going to make your loan officer's job that much easier when putting together your application. Oh, and by the way, if we haven't met before, my name is Sean Uyehara and I'm with Loan Depot. And it seems like yesterday I was just like you, trying to figure out how to get my mortgage right. Whether it was buying my first house or buying my first rental property. Navigating the mortgage waters can be nerve-wracking and it can be scary. But that's why I love helping people like you get your mortgage right and understand this crazy housing market of ours. So click on that subscribe button and you'll be on your way. And if you need help getting pre-approved with your mortgage anywhere across the country, make sure to check out the links in my description below. Number 2, now that we've completed your application, the second part of the 3-step process, we're going to send you a list of any documents that need to be verified so that way my team can finalize your loan pre-approval. Now, get your pen and paper handy. I'm going to give you the list. Number 1, you're going to need 1 month of pay stubs. If you're not working and let's say you're receiving some sort of pension or some sort of retirement income, we need your most current income statement. And let's say you're on Social Security, we're going to ask you for your most recent year's awards letter. So make sure you have your income documents ready. We're definitely going to be needing that to finish up your application. Number 2, we're going to need 2 months of your bank statements, and make sure that when you provide those bank statements, you are including every single page. Now, I know some of the bank statements, they may go to, let's say, page 6. Page 6 is entirely blank. There's nothing there. It is so common that a lot of our clients will omit that last page thinking, hey, there's nothing there. You don't need it. But if there's 6 pages, your loan officer will need all 6 pages. So just make sure when you are printing your bank statements or emailing them over, you have the entire file because that's what they're going to need. Now, the last 2 months of these bank statements, what the loan officer is looking for is where is your down payment coming from? Let's just say you're not using a checking or savings account and maybe it's a retirement statement. So if you get quarterly statements, make sure you provide your most recent quarter. The loan officer wants to make sure that the funds that are going to be needed to close on the house is verifiable. We have to make sure that these funds are in an account. We can account for them now while we're doing your approval. Remember, cash is not a good thing in financing. You can't just deposit a ton of cash tomorrow and say, hey, there's my down payment, I'm ready to buy this house. Because in the lending world, we don't consider that money seasoned if we can't verify the funds. So that is also something else that you need to talk to your loan officer about. If you have some money saved at home, I've had a lot of clients over the years have money saved in a safe. They've got it under their mattress. They've got it in shoe boxes at home. If you have money stashed away, make sure to have that conversation with your loan officer. And don't worry, we're not reporting any of this to the IRS. We're not here to tattletale on anybody. We just need to know where the money's coming from so we can help you get into your house with the least amount of stress. Number 3 on the list, you're also going to need 2 years of your W-2 forms and 2 years of your tax returns. Again, make sure that you have all of your W-2s. If you've worked for multiple companies, we need every single one because we're going to look at your tax returns and make sure that your income matches up to the W-2. And same thing with the tax return. Make sure to include all pages to the return. We only need your federal 1040s. So if you live in a state where you filed state income taxes, you don't need to provide that to the lender. We're just going to be looking at your federal 1040s. And if you do own a business, make sure to include your corporate returns as well. We will request that from you in order to qualify you for the mortgage. If you own other homes and other rental real estate, make sure to have those mortgage statements handy, your property tax bills, your homeowner's insurance declaration pages. If there's an HOA or a homeowners association, we will also request those documents as well because those are all expenses that you pay for every single month that we have to account for in your debt to income ratio. So if you have any of those documents, have them handy. And last but not least, we're going to need a form of identification. So most of you will always provide us your driver's license or passport. That is the bare essentials that you should have handy and have ready for your loan officer. And I want to give a quick shout out to our commenter of the week, M. Johnson, for asking the question, hey Sean, can you still buy in Vegas with 3.5% down? That's a great question, M. Johnson, and the answer is yes. FHA financing only requires a 3.5% down payment, and that's not only in Vegas, that's actually across the country. So if you are utilizing FHA financing, you can definitely take advantage of one of the best low down payment options to purchase a home. Now back to our video. Now hopping into the third step in the 3-step process is you've now provided our team with all of your paperwork that we've requested. And now we're gonna start digging into everything that you've provided. We're gonna run income calculations to make sure that you will qualify for the specific program that we're looking at. And some of you that are buying your first home and actually looking for down payment assistance programs, we will now make sure that you meet the criteria for those specific programs. Every single program out there has different guidelines. And that's why it typically takes us about 24 to 48 hours to go through your entire package, make sure that we're crossing the T's and dotting the I's, because once we've reviewed everything and we've issued you a pre-approval, we want you to shop for your home confidently, knowing that you will have your financing in place, and now you can focus on the fun part, which is shopping for your home. So while my team and I go through all of your information, some of the things that we're really looking at is, like I've mentioned earlier in the video, is your credit score. We're looking at your debt to income ratio, which is the debt that's on your credit report, the income that we've now calculated from all the information that you provided with us. And we look at the two to now see, does Joe qualify for an FHA mortgage? For example, FHA requires at least a 580 credit score. Now with a 580 credit score, you can put as little as 3.5% down to purchase a home. Let's say Joe had a 579. FHA can actually go as low as a 520. However, they do require a 10% down payment. So that's why it's super important for a lender to have the entire picture in order for them to make the best determination as to what program you can qualify for, and most importantly, to make sure that your loan is not going to fall out in the 11th hour. And you'd actually be surprised. That happens quite often. In fact, I just had lunch with a real estate agent yesterday, and he actually told me that one of his sellers had accepted an offer, from a specific mortgage company, which I'm not going to name, that they accepted the offer on a house, and within 2 days of the offer being accepted, the loan officer actually told him that the buyer didn't qualify and they could not move forward with the home. Crazy, right? You would think that the loan officer would have done his job to make sure that you, as the home buyer, your deal doesn't fall apart. But there's a lot of people out there that take shortcuts and deals fall out every single day. And I can tell you this because my team and I, we actually save quite a bit of deals throughout the country because loan officers are either taking shortcuts, and there's actually times where buyers are withholding information and they're not telling the loan officer the entire picture. So I urge you, if you are talking to a lender, make sure to tell them everything that they ask you and don't hold anything back, because there's so many things that can come up during the loan process that can actually hurt your deal. And that's the last thing you want, because once you go into contract on a home, you have your earnest money deposit, which is typically thousands of dollars, depending on the price of the home that you're buying, that you could potentially lose for oversights and things that maybe you're not thinking about, or something that maybe you didn't think it was important to tell your loan officer that you could potentially put up for jeopardy. So make sure you stay to the end. Remember, I'm going to give you a few tips on things to avoid so your loan doesn't fall apart. What can actually get your loan denied? So here's a couple of things to think about. Number one, if you are shopping for your home and your lenders got you pre-approved, do not, and I repeat, do not go and pull your credit and finance anything new. I don't care if you've got a new credit card offer that they're gonna give you 100,000 miles in order to sign up. Don't do it. Doesn't matter if you're getting tempted and Best Buy has a 0% financing offer and you wanna go buy that 85-inch screen TV, don't do it. Anytime that you are in the process of getting pre-approved and you're shopping for your home with your lender is monitoring your credit report. So if you take on a credit inquiry, they will know about it. They're gonna ask you, hey, Eric, what is this credit inquiry on your credit report from such and such store or bank or whoever it is? Now they're typically gonna ask you for a letter of explanation. And the letter of explanation basically needs to advise the lender why the credit inquiry took place and was there or was there not any new debt that was established. So if there was new debt, your lender now has to take into account the new payment in order for you to qualify. And not only do you not want to open up any new credit cards, but that goes the same thing with buying a car. What's funny about this, I was actually in the middle of buying an investment property last year. Me not taking my own advice, I actually ended up buying a car one weekend, and luckily I still qualified, but I knew I could qualify for the payment. It wasn't going to be an issue, but I had to provide my lender with more information on the car loan, the payment, and everything else that went along with it. So don't be like me. Don't go out and finance a car unless you can absolutely qualify for it. But in a perfect world, you would just wait until you get into your house and then go buy the car. Another big mistake that I've seen happen in the past is do not quit your job. Yes, I know that sounds very obvious. You're like, Sean, I'm in the middle of buying a house. Why would I quit my job? There was actually a client that one of my colleagues was working with way back in the day in my early years here in the business, that after his loan was approved through underwriting, he actually quit his job because he assumed that since the loan was approved, he didn't need to work anymore. So the guy didn't have any income, and they actually ended up having to deny his loan because the dude didn't have a job. So don't do anything while you're in escrow until you get the keys to your house. If something urgent comes up, please contact your loan officer and have that conversation with them, because more often than not, there are solutions to nearly every problem that can come up in the mortgage business. However, if you don't say anything and it catches your loan officer by surprise, usually at that point, it might be a little too late to save the deal. And again, the last thing we want is for you to potentially lose your earnest money deposit, which could be tens of thousands of dollars. And here's another tip. And if you're buying a home in a community property state like California, Nevada, and if you are using any sort of government financing like FHA financing, USDA, or VA financing, the loan officer has to take into account your spouse's debt in order for you to qualify with that type of loan. Now, the one thing that can come up, you've been separated for years, you haven't talked to your ex, and to you, they don't exist, but you're still legally married. I actually had a client one time, his name was Roy, and Roy was still legally married, but he put on his application, he was single. He did not mention his separation whatsoever throughout the entire process. While we were getting ready to close on Roy's loan, we actually found out that he was married. So I actually called him and I asked him, I was like, hey man, you never mentioned any of this to us. Are you still married? And sure enough, he's like, yeah, I haven't spoken to my ex in like 10 years. I was like, Roy, we're doing FHA financing for you. I have to take your wife's credit into account for you to qualify and buy this house. So luckily, she was a very, very nice lady. I had to personally call her up myself and do her application. And luckily, Roy still qualified with all of her debt in order to make this deal work. So if you're separated and you are buying a home in a community property state, you may need to look at either conventional financing, or you may need to have that conversation with your ex, and maybe you need to get legally divorced, because that is something that a lender cannot overlook. It is going to be something that's going to be brought up. Another thing that can turn you down is if you're not filing your tax returns. Again, that sounds pretty simple and pretty obvious, but I've had a number of clients over the years that they haven't filed 3, 4, 5 years worth of tax returns. They're making great money, and you know what? You might have a lot of money in the bank, but as a lender, in order for us to qualify you, we have to look at your taxes. And if you're not claiming anything, or you haven't paid anything to the IRS for a number of years and you're avoiding them, that's also something that you have to address and you have to fix. Now, one tip that I will give you is never be ashamed of your past. I think sometimes when I've talked to clients over the years, they might feel bad for maybe mistakes that they've made when they were younger, whether it was on their credit report or simple things, like I said, about not filing your tax returns. These are some of the things that hold people back from owning homes. But remember, as a loan officer, we're not here to judge anybody. We're here to help you achieve the American dream, which is home ownership. And there are so many avenues for us to make it happen for you. There's so many assistance programs, community programs that are out there that are geared to help people become homeowners. So don't let these opportunities slip by because of your ego or anything else that could be potentially holding you back from owning a home. Those are my 3 tips to help you get pre-approved in today's market, with an added bonus of what can actually get you denied. For more tips and strategies on how to buy your first home or even your first rental property, make sure to check out this video to learn more information on how to get your mortgage right, purchase your first home, or even your first rental property. And if you are thinking about buying right now and you need to get pre-approved, make sure to check out the description below for links on how to get started, and I'll see you on the next video.